How many times will Alameda Research liquidators get liquidated? Since the November collapse of disgraced Sam Bankman-Fried's crypto empire, liquidators have been attempting to consolidate the crypto holdings of both FTX and Alameda Research, with the aim of eventually returning some value to creditors. FTX's downfall was precipitated by a report of Alameda Research's precarious balance sheet. The trading firm's $8 billion in liabilities were propped up in considerable part by the exchange's FTT token, which dropped more than 90% over the following days. Despite the lack of risk mitigation procedures at Alameda, it appears that those in charge of liquidating the remaining assets may be just as gung-ho as the previous leadership. On-chain evidence of repeated errors paints a worrying picture for those hoping to one day recoup some of their funds. Alameda was deep into DeFi, as well as trading against FTX customers on the exchange. While itself exempt from risk of liquidation, Alameda Research was deep into DeFi, trading, borrowing, and farming tokens across the sector. Over the past weeks, the withdrawal of funds from lending platform Aave has resulted in repeated liquidations of Alameda's wrapped Bitcoin wrapped for use on the Ethereum network collateral. This was used to borrow Curve, the governance token of decentralized exchange Curve Finance. DeFi lending requires over-collateralization. The value of assets supplied as collateral must be more than that of borrowed assets in order to maintain the position's collateralization ratio, CR. If the position's CR drops, the position's collateral may be liquidated in order to pay back borrowed funds. This process is generally conducted by liquidation bots that generate profits in the process. While consolidating funds into a single address, which has so far accumulated crypto worth a total of $174 million, an Alameda-labeled wallet made a withdrawal of 11.4 wrapped Bitcoin, worth $190,000 at the time, from Aave on December 29th, putting the position into risky territory. Over subsequent weeks, as the price of Curve rose against Bitcoin, the position became eligible for liquidation multiple times. Specifically, this happened on December 31st for 2.6 wrapped Bitcoin, January 9th, 1.5 wrapped Bitcoin, and January 13th, 0.8 Bitcoin, losing a total of 4.9 Bitcoin. This is over $100,000 at current prices. If the Curve had been repaid first, the consolidation address contained 68k Curve, more than enough to repay the 20,000 Curve loan. The entire wrapped Bitcoin collateral could have been withdrawn without the risk of losing funds. Such a basic error inspires little confidence in those who should be working to return as much as possible to creditors. Unfortunately, other on-chain movements spotted over recent weeks show a similar pattern. Liquidators should focus on risky positions, not dust. In accumulating small quantities of various crypto assets, known as dust, liquidators have been spending far more on gas fees than the dust is worth. A January 6th transaction moving less than a cent's worth of staked Ether cost the Alameda 2 address $1.43 in gas, as the block's Eden Owl pointed out on Twitter. Not the best bang for the creditor's buck. Maybe the liquidators should focus on closing risky positions before sweeping up dust. Additionally, on December 27th, a number of Alameda-linked addresses suddenly sent a total of $1.7 million worth of crypto to exchanges Change Now and Fixed Float. Given their lack of Know Your Customer regulations, these are favourites among hackers to mix stolen funds, and the transfers may represent a rogue employee or a security breach in Alameda wallets. Nobody is expecting the liquidators to make it back in one trade, but it hurts to see on-chain evidence of them losing funds that could later be returned to creditors. While the amounts lost so far are a drop in the ocean compared to Alameda's multi-billion-dollar shortfall, hiring an experienced DeFi consultant may avert further losses in unraveling Alameda's chaotic web of investments. For more informed news, follow us on Twitter and Google News, or listen to our investigative podcast, Innovated, Blockchain City.